All right, ladies, welcome to our August 2020 MWM Zoom meeting. We are very grateful to have Holly Williams here with us this evening to share with us a little bit about her journey and give us some education. I won't give too much information about Holly's background because she's going to cover that during her presentation. But she is the author of Hidden Investing, What the Wealthiest 1% Know That We Don't, and also the principal of keepmore.com. And Holly, I will let you elaborate, and thank you again for having us.
Hey, it's so awesome to be here. And, basically, I don't have like PowerPoint City, but basically, this is my story. In 2013, I invested in multifamily syndication, didn't even know what it was, with a friend, learned about it and did another one, started helping him because he needed money and expertise. I sort of learned along with him. We learned it together, right? And so I did it over the course of the next 5 or 6 years, another 10 or 11 times, and just kept rolling over the distributions into more deals. And then in 2018, I became so passionate about this, and I was more, people that in my advertising, in the world of advertising, were asking me to, we'll buy this from you, don't worry about that, but tell me about this real estate thing. So they were more interested in that. So I left my job. I hired Trevor McGregor first. And he helped me with the courage to do this. I mean, it's crazy how we are programmed to think about life in a certain way, and how the rules and just that map of the world that we're given about what you're supposed to do, and that leads right into investing, right? I mean, it was just, you weren't supposed to do what I did, right? You weren't supposed to do it. And so when I didn't even know that syndications existed. I went to business school. I know all about the stock market. I mean, that's what I know about. I know all about P&E ratios, all this stuff. And now the more I know about, the deep down why, what happened during all this time. My parents were retired and they were old and sick. I'm 58. I know I look like I'm 30, but I watched what wealth they had disappear, because what people don't realize is that, or I didn't, that 401k is taxed as regular income when you take it out. It's such a scam. We put it in when we're in the lower tax bracket, and then when we take it out, we're in the higher tax bracket, because it's total BS that you need less money when you retire. It's complete bullshit. And so unless you want to downsize to a 1-bedroom apartment and never go anywhere, right? and so we have this map of the world and what we're supposed to do. And so I just really realized that this is a club, and you really have to know people that are in it to have access to private investments. And then you've got, the world out there, the media, between the media and our education and our families, all we hear about are the Bernie Madoffs. And you don't hear about the hundreds of people that are doing private investing, that would crawl over broken glass to make sure that, it's done correctly. And so what happens is that we're all afraid to think it's a scam. And Wall Street just gets richer and richer and richer and richer, and we pay all the fees. So when I really started learning what was happening, I wrote a book about it. But I got to play this for you because I just love this, and you guys will probably know it. But whenever I go speak like at some place that's not a real estate thing, I play this and I ask the audience, what did you just hear? And I'm going to play it, and some of you've probably heard it if you've ever heard me talk. But
Introducing Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio. Tell us how much you have and how long you need it to last. We'll estimate how much you could spend, then you can decide how you'll spend it. Schwab manages the complexity with automated tax-smart withdrawals that you can start, stop, or adjust at any time with no penalties, and you pay no advisory fee. Schwab Intelligent Income. Schwab, a modern approach to wealth management.
So this is just amazing to me. It's absolutely incredible because I came from advertising market research, and I know that this thing has been in focus groups and tested in agencies. And tell us how much you have and how long you want it to last. And we'll tell you how much you can spend. So you can in real time sit there and see how long you have before you're going to have to move out of sell your house because you can't afford it. Like what I found my father, he was doing it on a piece of paper. You know, he was like worried to death about was the money going to last, and it wouldn't have had I not been slipping money in the account for them that he didn't know about. So it was heartbreaking, and I vowed that I would not let that happen to my daughter, and that, you know, we talk about building generational wealth, and you know, the whole system, the whole game here is set up for us to die broke. That's the plan. Every single financial calculator that you look at, these financial advisors, every one of them says, how long do you want to be retired? You know, if anybody if I'm wrong, just speak up. Just tell, you know, every one of them. And so when this all became crystal clear to me, I really felt, you know, I began to, like my brother, right? I mean, it's changed his life too, because he's invested in some of my multifamily syndications, right? And some of my colleagues in advertising, and it's just so great. It's just the greatest thing ever. And, oh, I'm going to do it again. So anyway, you know, one thing led to another, and you know, I've been able to build a great life with great people and hang out in places like this, and I'm so grateful about it. But you know, I began to think, you know, there are these myths that we're brought up with, and they're myths, and I'll give you, the higher your income, the richer you are. We all talk about income, right? So, you know, how do the wealthy think differently? How do the wealthy think about money? Because as I found out more and more about private investing, I met more and more wealthy, successful people. And, you know, they don't think in terms of income, they think in terms of wealth. And you know, people think, you know, the rich are greedy. They get rich while all of us struggle. And, you know, Jeff Bezos may be a jerk. I don't know, but you know, he's not taking money from me and you. You know, they're not taking our money from us. If we redistribute it, it's not going to do any good. As a matter of fact, it's going to be bad because, you know, he's creating jobs and doing what he's doing, but it's not hurting me, right? You know, another myth is the tax code is designed to tell us how much tax we have to pay. The tax code is written, you know, I ask people too, how many of you agree that we should follow the laws of the United States? And everybody raised their hand, yeah, they should agree. How many people, you know, agree that it's patriotic, that it's our duty to follow the laws and not break the laws? Everybody, yeah. And then I say, you know, how many think, you know, that Donald Trump's cheating on his taxes, whatever? Everybody raises their hand, you know, because he's not paying attention. He's taking all of those loopholes and all these rich people and blah, 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 blah. Well, you know, what's happening is they're following the law. It says with the law, you don't want to show his taxes because he probably didn't make any money. And that, I don't know, but that's probably why, because I didn't make very much either, you know. And so So, they tell us to manage our wealth and leave a legacy, but standard financial planning isn't designed for that. So is this helpful? Or, I see a couple of people nodding, but I can't see everybody nodding. I'm kind of zooming through, but another myth is this whole 401k. The reality is that it's just not good. The numbers aren't there. The numbers don't add up. The Roth thing is good. I never could do a Roth, right? Because, whatever their definition of highly compensated and mine were two different things. I found myself at the beginning of my advertising career filling out the 1040 EZ, and I got money back, right, from the tech. And then as my career progressed, I was still investing like I was with the 1040 EZ, right? And I didn't know any different, and found myself paying 50% of everything that my family made in taxes. And it was crazy. And it is crazy because it's going poof, right? And so you can do a lot of more good things with the money than the government can. Yeah, I believe that. So, it's just not gonna happen, because with stocks and most of the commercially available investment options, and I say most, I'm just totally generalizing right here, but most, Wall Street is making so much money, and every one of them is just not going to get us through. And it's in everything that the stock market goes up and down and up and down. You have to sell the asset to get the money. And so the wealthy, invest in cash flowing assets. That's what they do. And, Warren Buffett doesn't go into his, he talks about stocks, but he doesn't go into his, I don't know, but I'm pretty sure he doesn't log into his E-Trade account and buy stocks like we do, right? So, those no-load funds, if you really look at it, there's boatloads of fees. You'll know that. So I go through a lot of this, and I go through it in my book. Trust the experts. The experts don't always know. And I was there during 9/11, and it really shaped me. I think everybody, it shaped us all. But it was really a horrible thing. And I remember we were all down there trying to help and dig through it was just bad. And Christy Whitman is the EPA, head of the EPA, and she was on TV like day 2 or 3. And she said, everybody, the air is safe down there. We can breathe the air. The air is safe. Don't worry about it. We've done all these tests, and people are dropping like flies now from all these cancers from ground zero. And it just wasn't right. Now, I don't believe that Christy Whitman just thought this up and wanted everybody to die and let's tell them the wrong thing. I don't think that there are these financial advisors. I think that they really believe that they're helping people. I don't think they learn it in college, then they go work for Merrill Lynch, and Merrill Lynch puts them in their training program and tells them this, that, and the other thing, and that's all they know either. So I don't believe that these folks are bad people. I just think that we're seeing it with coronavirus. Should we wear the mask? Should we not wear the mask? Can you catch it on a surface? Can you not catch it on a surface? Can you catch it on the airplane? Can you not catch it on the airplane? Should we go to school? Should kids get it? Can they not get it? It's just, they just don't know. But the not sure, like I'm not sure, but this is what we think part, that's not what they say, right? I guess because they're so afraid to say that they don't know it all, that they really lose their credibility fast with people like me. But anyway, financial advisors, you're smarter than you think. I write about that. And, then real estate investing is risky and unpredictable. And I talk about the stock market um, just being, people think that you're not in control, and real estate, man, you can, if you do it right, you can mitigate. If you understand those risks, you can mitigate them, and you have a much more of control than you think you do. It's really quite amazing. And then the good deals are all gone, and they're not all gone. They're really not. They're not anywhere near all gone. And there's going to be some really good ones soon, I think. But there's good deals all the time. And it's all about really understanding, yourself and what kind of life you want to have. The wealthy, I talk about how the wealthy plan their lives and then use money as a tool to get where they want to go. Right? They think about money, they think about risk differently. They think about money differently. It's money sitting in a bank is a liability. Money, the volatility. They understand how this money thing works, and we don't learn that in schools. Most of us don't, or at least I didn't. And so, I'm very grateful. I was a fairly successful business person, and bumbled around and did okay, and but I wasn't like uber successful or whatever, but I did all right, for a kid from Texas, in the suburbs. And I just didn't know that there was another way to invest. I just really didn't. And I'm floored that people that my net worth is a square root of theirs. I call them and they'll say, Holly, I invested in a land deal a few years ago and lost money. They don't even know. They don't know this stuff either. It's crazy. So, the 5 core beliefs of the 1%, I go into that, this whole idea of abundance versus scarcity. I never knew anything about that. We learn in school, right? Somebody wins and somebody loses, and you can only, we have a bell curve, you grade on the curve, and everybody, those, if they make an A, you can't make an A, and all of that. I mean, that's how society is set up, and it's not the way the universe works. I grew up in Houston, and I go back now, and there used to be a loop around the town, and now there's 3 of them, right? And I don't even know where they go. And it's like it grows. Everything grows. Everything expands. Everything. And we're not victims. Somebody asked me about being a woman in real estate. And I told this person, I said, what's great about it is that you go to a conference and the men's room line is so long, and we could just go right in to the ladies' room. So awesome. And I think that it is what it is, right? And I have more opportunities than my mother did. And I want my daughter to have more opportunities than I did. And women have really only been in the workforce for 3 generations now, something like that. And, we're doing okay. We need to be doing a lot better. We need to help each other more, but groups like this do. I mean, once you're a victim, you can never not be a victim. You can never not be a victim. You're always, and so we love victims. And the media loves victims. Oh my God, if we could, we're all victims, and you'll never get out of it. So logical, assets that don't cash flow are what's risky. The wealthy look at risk differently, and then money that isn't working is losing. All of those things, that just the attitudes that probably most of you already have. But my goal with this book was really to get people talking about it to a wider circle, and get some if one or two people, their eyes are opened a little bit so that they'll investigate this, I mean, we've won, and you know, I've done what this is intended to do. And so you know, we don't know everything. Share freely. You know, gratitude, you know, is an amazing thing. Things are really messed up, so it's not over. I can tell you, things are really messed up. New York City is a disaster. You know, and so it's not a good situation at all. Fortunately, we planned for it not to be a good situation, so we're okay. But it's not a good situation, and it's probably not going to be a good situation for a while, because it just takes a long time to get, because our fundamental value, you know, some of our attitudes have changed in a fundamental way with this COVID thing. And so there's some traction happening, and in some the ways of thinking that are not favorable to business people in New York City, and to property owners, and that sort of thing. And New York's not the only place. So, but we're going to get through it. And the way to do it is from a position of respect and courage, and some love mixed in, I think. And I think that we'll, you know, we were talking before, Michelle and I were talking about the, you know, her business, and just how it's just a different way, you know, this gave her a different way to think about how that business could work. So, you know, that's really what I wanted to talk about tonight, and we can open it up to discussion, or go away, whatever y'all want to do. but I just am really grateful, and you know, there's my book. And it's getting some traction without a lot of promotion. So I'm starting to really get on some podcasts now, and started this Facebook group. And so my plan is to have, so I want to write two of them. So the first one is just my story and this, right? And the second one's going to be about other hidden investments that we don't know about. I'm going to have like guest authors. So infinite banking, oil and gas, and maybe even some, you know, the mobile home park, you know, all other things, art, you know, other kinds of maybe investments that private REITs, you know, that maybe the average person just doesn't know exists, but the wealthy, that's how they build generational wealth, is cash flowing assets. And so that's my plan. Next step is this Facebook group, if I could figure it out. I want to have Facebook lives and guests and content, and people are telling me that I need to take these 10 myths and blow them out into a video series about it, and, you know, really educate and stuff like that. I don't, you know, that's what I need to do. I'm not sure how to go about that, you know, which is just kind of crazy, or maybe I'm just lazy, or I just don't want to do it. I don't know. But I've certainly got the content. I just need to just map it out and do it. So you guys can maybe inspire me to do that. So that's that.
Thank you, Holly.
There you have it. In the meantime, multifamily syndications are great. The deals have slowed down. The SEC has realized that all this money is going out of the stock market and into private investments, and they're doing everything they can to make it more difficult, which is why everybody's doing this 506c, you know, stuff. I mean, they're not on our side, and so that, you know, there's a lot of stuff going on in that arena, and that you know, it's just the timing. It's just it's not as easy as it was last year, but there's a lot of capital that that a lot of people want to deploy capital. Interest rates are at historic lows, and what else are they going to do with it? So the more deals we find, the better life will be. So then we're the answer, right? Or one of them. How about it?
Holly, I appreciate that so much. I'm curious as to what everyone else on this call's experience has been, because I grew up in probably lower middle class. Investing was never spoken of. I didn't learn this was a thing. Even stocks. I mean, even the most basic forms of investing, never talked about, ever. It's kind of like rich dad, poor dad. I was definitely the poor dad family. All in the education and, you know, wonderful people, but it was just never discussed. So it's eye-opening for sure when you start to realize there are ways that people understand money. And that's obviously why, you know, I grew up in that mentality of, if you're rich, it's because you stole from somebody, cheated somebody, whatever.
Right.
You know, it's such, you know, and so you never aspired for that because you don't want to be a crook. So you just try to live your safe little normal life. So my mind was blown when I finally started getting around people that understood money differently. So I'm curious, how did everybody else come up? When did this, was it talked about in your family? What made the shift to multifamily? And how did everybody kind of discover that?
I'll go. I actually, I was in the traditional investment business for almost 25 years. And so I actually just wrote a piece on the 10 reasons why I left the traditional investment business for multifamily. So it's like, we'll compare notes afterwards, Holly, because literally my bullet points look the same and I didn't have read your book yet.
Is what I'm saying, am I right?
Yeah, you're spot on. And in fact, I was just doing a podcast last week, and I was trying to say, it's not necessarily that there's anything nefarious going on. These brokers really are doing what they're taught. They're not trying to do anything bad, but at the end of the day, you're putting them in volatile products. They're being feed to death. In fact, I just wrote a piece on the hidden costs.
We got to get together.
And that, yeah. We got to do a dynamic duo on it.
That's
so
what we need to do. We need to do like a video series on this stuff and be like, I
actually know, and I can actually help you get some of this stuff rolling too. I do a lot of marketing and stuff, so I can help you with your 10 videos.
We could be like the two, I don't know. We need to think.
Watch out, world!
And play off of each other. This could be fun.
Yeah.
I bet we could do TikToks.
Yeah, well, we'll have to get our kids there, but.
So I actually, I went to school and I did get a finance degree, and I was really irritated when I invested my money with a financial advisor, and back in 2008, we lost half of it because he didn't put stops in. He wasn't looking out for me. In fact, I never even got a phone call even after all this had happened. And I was just like, are you kidding me? So when somebody brought to me the whole rich dad concept, I'm like, what do you mean we can invest in real estate? What? It was just like, how come nobody told me this? I got gypped in my education, So
it was a scam, right? It's can't be true. You can't be getting these returns. You can't.
Yeah. So anyway, now I'm at an age where I'm like, I can't run fast enough to make up. At least I'm trying. But man, I came in at the kind of at the wrong time.
Honey, you're younger than me, so.
Well. I don't know,
I actually feel a little late bloomer, like you're mentioning, Jennifer. Yeah.
Yeah.
But, I guess better late than never, and what a blessing that we all get to have.
Yeah.
I'm in Miami, and mostly brokerage. I know you were talking about brokers, and hey, I deal with the shit too. So, been licensed since 2004. Started residential, went into commercial 2006. So Michelle's asking when that all started. Actually, let's just put it out on the line. I was going to be a bartender for the rest of my life. I moved to Miami, and I was bartending on Lincoln Road, and it was a jazz bar. And from there, I just moved to some different sales positions. But my current broker, which is Janet, was the one that encouraged me to get my real estate license, and I did. And 2006 started with commercial, mostly multifamily. I've done shopping centers, warehouses, land, but mostly it's multifamily. So when you talk about where it all starts and how it all comes from, yeah, I didn't grow up with any of that. And I didn't grow up with a lot of, hey, let's try to plan your future. So I created all of it.
Good for you.
That's awesome.
So as far as like brokers, and again, I know everybody's got their vibe about that. But for me, I mean, I'm even talking to people that are out of state that are looking at properties here in Miami, and it's the full truth and nothing but the truth. And if it works, it works. But, you know, everybody's got a certain criteria. It's pretty much just the numbers and how you get a return, and, you know, is there value add? And so I deal with all those things, but everything is always the truth. So I don't know what you guys experience from other people selling you other properties.
Well, I'll share my experience. I grew up as one of 10 children in the family, and
Amen.
we were very frugal, like extreme frugal. You know, we grew up on a farm. We raised all of our own chickens and cows to eat, and garden and stuff. So very, like, that's very hip now, right? Like have a garden, but you know, and grow your own stuff. But it wasn't back then. It wasn't that exciting back then. Yeah, investing. I mean, Michelle, you asked about investing, and you know, did your parents teach you about that? No, not really. I also grew up very traditional. So, you know, the girls did one thing and the boys did another thing in my family. So investing was never something that was discussed, but I was fortunate enough to get involved with a realtor. So right after I got out of high school, I got married young, and we were living in a garage apartment. and the lady who owned it, it was like this old garage that she converted into an apartment. She was a realtor, but she also owned several investment properties. And so we were talking to her one day. She was really nice. And she told us about, you know, house hacking. It wasn't called that back then. That was, you know, it was like 20 years ago that we did it. And we're like, oh, well, we have no money. Okay, we'll do it. And so that started our real estate journey. And then I read Rich Dad Poor Dad right after that. I think I was 22 when I read it. I'm 40 now. And totally changed my view. And I gave it to my dad, and my dad's like, oh, I think I was the poor dad. But then I started like investing slowly and small in, you know, single families here. I eventually went up into a small multi, did a fourplex, but buying an apartment, like that felt so mind blowing to me, because the biggest piece of real estate I bought was, you know, $200,000 fourplex I bought. And when you think of apartments, you're thinking in the millions instead of the, you know, 100,000s maybe. And my brain just couldn't like compute that. But I always had it on my vision board. It was on my vision board. I knew it was a solid thing to do, but I had no idea how to tackle it or take it down until last year, 2019, early 2019. It was going to be my 40th birthday. I was going to turn 40 in the end of 2019. And that's when I said, okay, you got to do it. You got to do it. This is your year. Like this will be your birthday present. Give yourself an apartment building. And so I had to figure out how the heck to buy one. But then I started educating and learned about syndications. And I was like, wow, really? You can like do this with friends, with a group of people? That's so great. So that's what I did for my 40th birthday. I got myself an apartment complex. Well,
Good for you.
I just invested like as a limited partner, but hey, I feel like I own that thing.
Gotta start somewhere. That's awesome.
That's right. Awesome. And now I'm working on my first GP. So hopefully my first GP will close later this year. This year has been lots of really bumpy, but yeah.
That's awesome.
Thank you for sharing.
Also, the great thing about investing in apartments is the scalability. If you're aligning yourself with a great team, you're bound to definitely scale faster than the single family homes. That's the biggest thing for me as far as investing in apartments. So that's why. And also, I couldn't run enough quicker from the stocks. I still have money in the stocks, and I'm so nervous right now, but I can't find deals. So it seems like everybody's waiting for the COVID-19 to
Yeah.
be over. So, but
A lot of people are.
yeah.
But there are some, we'll talk. There are some things that I'm looking at.
Oh, cool.
Yeah.
I'm actually in a deal right now, 150 units in Houston, which is great. But I'm talking about, generally speaking, it seems like
Oh yeah. A lot of people, if it's a cash flowing deal that I look for, people are hanging on to it because,
Yes.
you know,
I think there's going to be adjustments, few months from now.
not the pre-COVID prices. Prices haven't.
Yes.
So like for me, if I may jump in just real quick, like me calling owners, which is what I do, I pretty much hunt all day long. And, it's like, well, where am I going to put the money? So that's one of the objections that I always have to overcome.
Mm-hmm.
Sometimes I say, well, what about a triple net property or something like that where it's less manage intensive? But beyond that, yeah, it's where do you put the money?
Yeah.
Yeah, Holly. Well, where do you put the money? Would you take out the money from the Wall Street now and just temporarily put it on hold and wait for the opportunity after?
I have some money in a note fund.
Yeah.
I'm getting 10%. It's, it's not bad.
It's 10%. Yes.
Yeah, not
These,
bad.
are these non-performing or performing?
Well, it's
Mixture?
yeah, both. I mean, Dave Van Horn he's in Philadelphia, and he knows. I know him pretty well, and he's got a couple of note funds. One of them's pretty liquid. It's like a 90-day thing, and that's 8 or 9% even then. So got some in that. I'm learning about this infinite banking thing, and there's a group that I got involved with. Learn about it. That's doing. If I get run over by a car and an ambulance chasing lawyer comes and got a lawsuit and I end up with several $1 million settlement or whatever, there are people that put these structured settlements together so that the person will have, income for the rest of their lives. And then that structured settlement is sold off, right? And all of it is backed by life insurance.
Oh, wow.
Okay.
Yeah. And so you can invest.
That was like the short and quick, wasn't it?
You can invest in these structured settlements because they take the $1 million and they'll go invest it in a gazillion other places, right? So you can invest in this. It's crazy stuff. So
Ever heard of that?
How long have you been doing that?
what is it?
How long have you been doing that?
Doing that for now about a year. I've had a little money parked there and from the stock market, and I don't even want to tell you what it's doing. There's not tax benefits but it's great for my 401k.
Oh, wow.
Because the syndication is not the greatest thing for retirement plans. It's not the best way to do it. I mean, I've done it, and it's better to do it from a 401k than not do it, right? But you don't get the tax benefits like you do if you use regular out of retirement money, right? So I don't have very much in the market at all with the 401 with the all the retirement stuff, and then.
And can you use IRA money as well?
Well, sure.
Oh, okay.
If you set up a self-directed IRA, which a lot of people don't know about either, and that's another
Right.
conversation. So yeah, we could do all kinds of stuff, little videos on this stuff, all about how money works. That's what I want to do. I just need, here's my thing. I was a corporate fat cat. Seriously, I was a corporate fat cat that had a staff of people, and I would say, oh, let's make a video series, and they'd run off and make the video series, right? And either that, or I had a boss that was telling me what we needed to do, and I just execute, and so I have a harder time promoting myself, because I'm always, the way you get promoted in a corporation is you get your boss promoted.
Right.
You're all about promoting everyone else,
Yeah.
but not promoting me. That's why I had to hire Trevor, just to even learn how to. I didn't even want to put the hidden investing expert on the cover of the book, so it's like so at least I know that about myself, right? So it's a known flaw that I have to have like a group around me to really make it happen.
Yeah.
And it's, and I have a passion for educating women just generally.
Yes.
It's women, women tend not to want to talk about finances. We're brought up to think that's a taboo subject, and if you want money, you're greedy and you're bad and you're one of those, and
Right.
and it really needs to be demystified. It really does. And, at the end of the day, women are going to listen from women. So it's up to us to educate the women, really.
Mm-hmm. Mm-hmm.
And it's been a lot of the men that's kept the women from getting educated, and, and it's empowerment, and I was seeing in my client base is once you get the women involved, they actually can turn their husbands around. Because the men don't know nearly as much as they think they do.
People have told me that it's really immoral if we don't share this. Like
That's my life. Yeah, that's my life mission. It's like educate the women.
yeah, I mean, that's what the conclusion I've come to is that there are people that I really love that still don't understand what I'm talking about. They still can't get past the view of the world that
The commonality.
yeah, it's just so foreign to them, and if it's so great, why have
women control so much money, though? That's the thing about it is women really do control a lot of money in this country.
Oh, without a doubt.
Women live longer, with the divorce rate, and women wait, to get married and everything. There's just women control money, and they're not educated what to do with it.
Yeah.
It's true, and men, I mean, all of it, everybody. It's we're raising in our school systems people to worker bees, right? And I want you to learn how to code for me. I want you to learn how to build a bridge for me, right? I want you to be an engineer. I want you to be I want, and they're not learning how to put it all together and to think critically about what they're hearing and what people are telling them. And it's just not the whole story. It never is.
And thinking about long-term strategy, and being just strategic thinking and decision trees. Decision trees went out. I mean, does this generation even know what a decision tree is?
Well, the biggest thing is, what kind of life do you want?
Yeah.
I mean, that never occurred to me. I took a job in New York City because that's what you were supposed to do. I got this great job offer and it turned out okay, but it never occurred to me did I really want to move to New York City? It just really never occurred to me. I said it was only supposed to be for a year anyway, but it was all about the opportunities for my career. It's, I never thought about this. And I thought that's what you were supposed to do. My father worked for an oil company. We moved to Houston and Dallas, whatever. And I thought that's what you were supposed to do. And it worked out. I'm okay, but more than okay. I mean, it still worked out. That's the whole thing. Life kind of works out because the universe is good, you know, but people think there are different ways to think about a lot of this stuff, and we're not sharing that with, probably because most people don't know.
You know, I think
Hey,
that
Holly, I have a question for you.
Yeah.
Sorry, this is Kathy. I have a question for you, Holly.
Yeah.
Are you investing in any gold or silver?
Yes.
So how do you do that?
Through well, so for about 5 years now, I've been, every now and then I go to the Diamond District and I buy some American Eagle coins with cash. So that, because if you spend less than 10 grand, there's no record. You guys are think I'm crazy.
That's awesome.
But I've been doing it.
That's the pro tip that we're walking away with.
Yeah, that's everything right now in a whole little bow.
Yeah. Even if you order it from JM Bullion, if it's less than 10 grand, they don't have to, whatever.
Claim it.
So they say. That's what
Diversify our portfolios.
my husband thought I
Off
was
the
nuts.
books.
So my husband thought I was insane. He's like, "What are you?" Because I didn't even tell him.
You're walking in the streets with all these coins.
Yeah, exactly. Yeah. So, you just never know, do you? It's a hedge. But yeah, the other thing I did, y'all are gonna really think I'm crazy. So there's this guy that I met, Chris Noggle, and he has a thing called the Money School.
I've saw him in a few webinars recently.
All right, so I'm gonna start referring people to him because he's gonna pay me. But anyway, but we'll see about that. But no, but he was developing a course on how to trade options and ETFs, and so he wanted to beta test it with some people. So for a week over the summer, I took this class that he was doing, and it was like 3 hours every morning. It's crazy what you can do. So I've been buying GLD. It's the ETF for gold. And so you look and see where it's trending in the morning. And if gold is trending up, you buy, a couple of contracts of this, and then you just set it for like 20, 15% or 10, whatever your plan is, right? And you go away and you make a couple $100. It's just insane. And so, I get it. You could do that with $1 million and make more. I get the whole, I get it, so there are ways to do this, like Wall Street's doing it, but I never, I don't want to be this day trader, right? Because you have to sit there and look at it all day, but it's really amazing. Just learning about how it really works.
So do you do Forex?
No, I don't know anything about that. And my friend I have another friend who is all about this crypto, and I have absolutely no idea what she's talking about.
Really? Okay. I don't get into it. I know about it, but
I know about it. She's into it.
Theory.
She's into it. She's like, you gotta do crypto. It's starting to, Goldman Sachs is in it and all this stuff. But I don't know. So I'm not a financial wizard, that's for sure. But there are definitely it's definitely pretty fun to see what's out there besides
You're clearly risk acceptance.
What is it?
You're clearly risk acceptance.
Well, you got to know about it, right?
Yeah, absolutely.
These people that jump out of airplanes strapped to somebody, they're supposed to pull the thing and you don't know what to do. What if the guy has a heart attack or whatever? I want to know what thing I'm supposed to pull to get the parachute out. I want like a plan B. I wouldn't like just go jump out of a plane with somebody without a class on how to skydive either.
I have a funny story about that. So I went skydiving I guess last month.
All
And
right, good for
they
you.
literally give you about a 30-second. Okay, so if your guy passes out on your back, here's what you do, and you're like,
Oh my gosh.
I'm not trained for this.
Exactly. I want like a class on skydive. You know, like I'm a scuba diver, and people die all the time at those resort course things that you take, like, you know, in Mexico, or, you know, this okay, this not okay. Just breathe. And people die all the time because they don't know enough to not die.
So Michelle, you just jumped?
You just jumped?
I did. It was my second time skydiving. I went
And
last year too.
was it awesome?
You're a daredevil.
Oh, it's incredible.
Right, on.
Has anybody else skydived here? I can't be the only one.
I never did.
All right. I knew there had to be at least one other person on
I
that.
was actually in the middle of getting certified when COVID hit.
Oh, really?
Really?
Yeah, no, I was actually going to join an acrobatics group.
There you go.
Oh,
There you go.
Wow.
Really learning how to do it.
Yeah. So COVID destroyed that dream for me. Well, it put it on hold.
Yeah.
Yeah.
There's a place up here where I am in New Paltz, New York, that called Skydive the Ranch, and that's what they do. And they have classes, and you can
Oh, wow.
do it. I've not been there, but
Michelle, was it amazing?
Yeah, it was incredible.
So can you actually see when you're falling, or you're just like falling and you're just focusing on, oh shit?
So the first when you first exit the plane, it's crazy. And then it kind of feels like, not like it catches you, but then you just feel like you're floating down. It's pretty crazy. You can taste the clouds. It's really weird.
Wow, good for you.
Yeah.
And it's cold and your face shakes like crazy.
yeah, I bet it does.
If you go and you get a video, be very prepared to see yourself with like a flapping face. It's shocking if you're not ready for it. It's like take a leaf blower and just like shove it in your mouth. That's kind of weird.
It would be wild.
It's fun. It was fun.
Like, is that where we start to practice with the leaf blower and then we move into the plane?
Yeah, that's training ground.
There you go.
Thank you for sharing that.
Oh yeah.
Oh my goodness.
All right. Anybody else have question? Michelle?
I had one quick question. Holly, for syndications, are you only a passive investor at this point? And what are the pros and cons in your minds to passive versus being in the GP?
So no, I'm a fairly active on the GP side as well. So it's just a lot of work. You know, it takes a lot of people to do one of these things.
Yep, for sure.
You can't do it with 2 or 3 people, or you're back to the whole institutional money.
Yeah.
Right? Because you really have to have you know, a group of people that can do investor relations and that can do, you know, the help with the due diligence, and I do some of the advertising, you know, making sure that the apartments.com and all that some of the marketing for the stuff. But it's a lot of work, and I don't do the main on the ground thing. I like co-GPing with just a few partners that I trust, just a couple actually. And that's worked out real well.
So someone else handles the asset management.
Yeah, it's a lot of work. But I spend a lot of time doing that and dealing with working with investors and stuff like that. But
Wait, what markets are you looking in?
the Carolinas, Texas. I love Charlotte, Raleigh. I lived in Asheville for a little bit. I love Texas, of course. I'm from Texas. I think a lot of it is, I'm sort of wait and see in some of this too. I will tell you, this whole secondary market thing is crazy. Like where I'm sitting in Woodstock, anything within a 2-hour drive of a major metro area is just crazy booming right now. And the city people will pay anything. That I could rent my house for like 10 or 15 grand a month right now. It's insane. A house goes on the market up here and it's sold like in minutes.
Yeah, it's tough in the single family game right now.
It's what now?
I
Miami's
said it's really tough in the single family game right now.
People are wanting houses.
absolutely same here in Miami as well.
Very low. So
I spoke to a developer today. I had a waterfront property. I could have pitched him. He's very specific. He wants open bay. He wants a house that he can sell for 12 million. And I'm thinking, oh, I'll pitch him something for around 7. He can sell it for like 3. Nope, wouldn't go for it. It's got to be very specific, but things are very active in single family.
for sure.
You can't touch anything. I mean, I'm telling you, New York City is a mess. And a lot of these people are just not coming back. I mean, you know, they're not coming back. So I wouldn't have predicted that, but nobody would predict COVID, right?
Right.
But this house that I'm sitting in has gone up 30% easy.
Since March?
Yeah, easy.
Wow.
Easy. I mean, if it were just me, and it's not just me, I got my husband and my daughter's a sophomore, junior in high school now. But if it were just me, I would rent this thing out for 15 grand a month and not look back. I'd be down there in Miami.
There you go. I got a palm tree for you.
I'd be down in the Carolina. I love Greenville. Where are you?
I'm in Greenville, South Carolina.
I'm telling you, I love it. We've got 2 properties down there. And when I went down there, I was like, oh my God, there's a Top Golf. They were building a Top Golf. I mean, seriously, this was a little cow town when I lived in Asheville. This was nothing. And they've got bikes.
Are you in Dan Hanford still stuff?
Yeah, I've worked pretty closely with Dan.
I'm in his premium group.
What is it?
I'm in his premium group.
Oh, okay. There you go.
Mastermind.
Yep. He's a good man. And so yeah, so Dan and I are buds, and Danny Rendazzo, and I like them a lot.
So you're no longer working with Joe Fairless then, Holly?
Yeah, I was so that Joe's the person that got me into this. He's the guy that called me and
I
said,
remember you told
hey,
me
I found this thing and I'm going to quit my job. And I took him to dinner the night he quit his job because he was unemployed. So yeah, so I invested in his first deal. And so he didn't really know much about, I mean, he was a smart guy, right? But he didn't know what he was doing and I didn't know what I was doing, but he knows what he's doing now. And, but I never in a gazillion years. That just
$millions later, of course he has to know.
I invested in his first deal because I believed in him. I had absolutely no idea that it would lead to this whole thing. And then when he called me, his second thing, he said, listen, I want you to do this with me. We need to raise $1 million. And here's this thing in Houston. I said, all right, I go down there with, Joe and I meet down in Houston and go meet all these people. And I was like, yeah, let's do it. And so that's when I realized that not everybody knew about this. I thought I was the only one that didn't know about it. But yeah, so I kind of, he's a lot smarter than me. And he wants to work a lot harder than me. And, but we sort of learned it together. So I never was really coached by anybody, but so then his star students like Dan Hanford, I kind of take them, work with them.
Do you know Chris Salerno in your area as well?
I know Chris, sure.
I had the pleasure of meeting him at Jake and Gino in October of last year.
Yep.
So I saw him and I'm like, I got to talk to this guy, and I'm kind of not too shy. So
yeah.
I said, listen, there's a group of us getting together and going to breakfast at 6:30 in the morning.
And he was there at 6, wasn't he?
We met in the lobby.
You damn right he did. Yeah. He's a great guy.
It was just rock and roll like that. And obviously, he had a baby. And so it's been great.
That's great.
Yeah.
Have you ladies had any negative, like really negative experiences as passive investors, or any lessons you've learned along the way, from mistakes?
I haven't had bad experience. Yeah. I've had a not so great experience, but I knew sort of what I was getting into. I invested with someone because I really liked them. Right. Not that I think that they're really, I didn't know, I'm on the board of the Texas Tech School of Advertising, and Joe Fairless was like the star student. So I've known him for 15 or 20 years, and when he was in college. So I knew that this kid was a smart guy, right? And was knew how to execute a business plan, right? I didn't know anything about these people except for I liked them, and it just, I didn't ask enough questions and all that. It's going to be fine, but I've had to go in there, and we've had to go in there and do, like, why, it shouldn't take you 6 months to find out that the management company sucks, and you don't blame it on the management company. It's your problem. Why aren't you managing the management company? So part of it is it's hard to do this when you're living in New York and the deal's in Houston or whatever. That's why I'm not on the ground. I mean, I think that it's really hard. If you're going to really do this, you got to be there within a close proximity, because if we're going to avoid Wall Street, we got to get and see the little things that make a big difference in raising the NOI. Like when Joe and I went down to see the first deal in Houston, there was a waiting list for washers and dryers. I was like, are you kidding me? You can put the washer and dryer, you call the company, right? They rent them for $50 $50 a month. They'll pay, $35 a month all day long. And, 200 units. I mean, it's just easy money, right? And it was just too small for the hedge fund or whatever to worry about stuff like that. But if you're down there, you know this, and you can find little stuff and really make it work. And it's hard to do that when you're in New York with a spreadsheet. So
now, what's your mix of active versus passive?
Probably 50-50. Because I invest, like Dan and Danny, I invested with them on their first 2 deals passively to see how they work. So that's just what I want to know is who, and then, we've become great friends. So.
Do you have a particular asset criteria to invest to? Do you stick to it?
Yeah, and that's kind of what I'm talking about, like throwing out deadbeat tenants and that kind of thing. I want capital preservation first and foremost, and cash flow second, and then if it appreciates, great.
Yeah.
But I want to work with people. This is executing a business plan. And that's there's a lot of people that think that they can get into this, and you got to have business people that understand business. And that I do. I understand how to manage a management company. I understand how, because all that corporate fat cat stuff, I get all of that. I can read the P&L, all that stuff. And so you got to have people that can do that. Because it shouldn't take you more than a month to realize that the people in the management company don't know what they're doing. It shouldn't take you 6 months to know that. Mm-hmm. So there's no excuse for that. So a lot of people think that raising money is the hard part, and it's really managing the asset. So
what's the minimum cap rate that you look at?
I don't even look at them.
Okay, so it's a price per square foot, price per price per unit?
About cash
Cash
flow.
return?
What is it?
Is it the cash and cash return or
It-
the IRR or exit
Cash flow. It's the cash flow.
cash flow? Same thing
Cash
here.
flow. And it's here's the thing. You gotta go. So what I do is I go down and
So
at least
Tiana,
on the
what?
that I'm GPing on, I'll go down and I'll pretend I'm looking for an apartment
Mm-hmm.
and I'll secret shop these places. It's pretty funny because then we'll buy it and we'll go back and they'll go, I knew you were you're really but yeah, so I go down and I don't want to go on the tour with the broker and all that. I want to go pretend I'm looking for an apartment.
Yeah.
And
Like,
yeah, and so I want to make sure that what the underwriting says is really doable.
yeah.
You know, it really
Proof is
takes that kind of stuff. I mean, I want super conservative. Like the last deal we did in Charlotte, it's 96% occupied, and it's a mix of white collar workers from Lowe's and NASCAR's right there, and then some healthcare workers, and then some retirees. A lot of people are moving to Charlotte and they're like renting for a year before they decide what, you know, they want to do. They're fleeing from the Northeast and stuff. So far everybody's paying the rent. I think in this market, you're not going to get a ton of, this is very blanket, a ton of appreciation. Like the demographic that is paying the rent is probably A minus, B plus to A minus, you know, the white collar, younger couples, that sort of thing. That's kind of the demographics, but it's got to be cash flowing. And that's why we haven't found very much because it's got to be, this was 96% occupied and we underwrote it to work at 55%. Stress tested to 55%.
break even.
Mm-hmm.
Oh.
Economic occupancy, and it's, yeah, I mean, so it's pretty conservative, but I don't think it's gonna be, I may be wrong, but who knows? So I don't want to depend on the market. That's the whole point.
Yeah.
Right? That with stocks, you depend on all this stuff that you have no idea about.
Yeah.
So with me, I'm looking at it, if it cash flows and we can sell it for a little bit more, maybe. I mean, it's just, you know.
How long do you stay in your deals?
Yeah, I was
Do you
gonna
hold
ask
for a long time?
The 3 to 5 year business plan. That's the other thing.
That's it. Okay.
This whole refinancing and, you know, secondary loans and pulling money out, all that stuff shouldn't be in the plan. It should, like, for the numbers to work, you shouldn't have to do that.
Yeah.
Like, that should be gravy on top, right? That's awesome when it does happen, and it usually does, but that's certainly what we plan to do, but we don't put it in the plan.
What do you think about holding it for perpetuity, right? Like just taking one and holding it forever.
You know, honestly, I think I would like to do that myself with a smaller, not by myself, but maybe with one or two people, like 50 or 100 unit, you know, just like we did a little deal in Knoxville with Dan Hanford. I helped them on it. It's 34 units in Knoxville. You know, I could see myself doing something like that, you know, and just doing it and holding it forever. One of my investors lives in Maine, and he wants me to syndicate a deal with him in Maine. I don't know much about, I mean, I know that it's booming, and I know that, you know, these people from Boston are moving, you know, want to do Portland's happening, and I don't know. Let me go look at it. He wants me to, but he's got 4 small multifamilies there already, and he lives in Maine. And he's invested passively in 4 or 5 deals of mine. And he's like, listen, I found this thing, and Let's see, I'm looking at it.
Fantastic to find things.
What is it?
He said he found this thing, and I go, it's fantastic to find these things.
Well, he's there. He's that's just it. Even people that do they don't know about syndication.
Right.
He's invested in 5 deals with me over the last 3 years, and he's like, this is unbelievable. We need to do this.
Fantastic.
So I may. I'm not sure about Maine. I'm not sure about the Northeast, but I do know that I'd move to Maine.
Where in Maine?
In Brunswick.
Oh, okay, that's nice.
30 minutes outside of Portland. Bowdoin College, whatever it is there. Companies there's a lot of stuff going on.
It's happening up there.
You would not think that it is, but it is. So I'm going up there actually next week. I'm going to drive so I don't have to fly with COVID.
I flew to Boston the end of June, easy peasy. I just flew to Kansas City via Charlotte.
Yeah.
Easy peasy.
All right. That might do it, but Portland's kind of a tough spot.
Medina?
What is it?
I said Portland's a kind of funky cold Medina.
Well, no, it's one of those little places.
Oh, okay.
I mean, it's one of those like, it's not Boston, but see, that's what's booming right now. Greenville is, I love Greenville, and like the suburbs of this Lake Norman property that we have, and Charlotte, Raleigh, all of those, but just not in the heart of the cities. I think people want more space, and they don't want like elevators and stuff like that. They want like garden style stuff. Some of them have garages that are attached. It's that kind of a thing, and it's very appealing to people right now.
Do you work with people that build?
No, I don't know much about that. I know that it doesn't cash flow right away.
Yeah. What about people that want to buy hotels and turn them into multifamily? Nothing yet? A property traded here. It's an area called Hialeah. It's like a blue collar worker.
I know.
It traded for $15 million. He picked it up for its 258 room Ramada that's been black for years, and he picked it up at $55 a door. He's also a builder too, so apartments. Yeah, he sold property last year for almost $300 a unit.
See, that's not me. I want this deal in Maine is cash flowing. That's
your thing.
It's occupied in the 90s, 90% of all, the whole thing, all those boxes are checked. I don't want anything that, yeah.
All right, ladies, well, we're getting close to the hour-and-a-half mark. So does anybody want to share anything real quick, or do you think it's about time to wrap up?
Christine, just want to say thank you so much for allowing me to see the opportunity on Facebook to join you ladies tonight. I've enjoyed it. Thank you so much. I don't think I've talked this much before.
I love this group. Yeah. I really do. I really, and thank you guys for having me.
Thank you, Holly, for your time, and thank you for sharing us your journey and for your. Michelle, I think, wants to say something.
Michelle, no, I'm good. You're fine. I was just gonna say same thing. Thank you for jumping. It's nice to have the nice small group, intimate conversations. It's fun. It's fun to just get together.
Yeah.
So we appreciate your time.
I think this whole Zoom thing has, there's certain things that are advantageous about it.
I totally agree.
Yeah.
It's all how you look at things.
It's a synthetic fun.
Yeah.
I don't know. I've been on Zoom all day, so I was like, oh, one more.
You're melting. You're melting.
Did I see a map of Massachusetts behind you?
It is. I was on a call. I work with colleges and universities. I have 8 different states that I cover. So I look at different markets, pretty widespread. That's why I was just curious of where you're at. I am looking in the Texas area, and I used to call on the Houston School District there. So I'm very interested in out of state markets because Boston area is high price, but I am in a fix and flip right now. So once that project's over and done with, I'm looking for more. So.
No, that's interesting. Well, we should talk about Maine. Talk about Maine.
Yeah.
All right. Well, unless anybody has anything to share real quick, we'll just say thank you again. Thank you, ladies, for joining us.
It was great.
We appreciate all of you.
Hosting. Thank you.
It's been fun.
All right. See you later. Bye.
Bye, guys.
Have a great night, everyone.
Everybody.
Good night.